Imagine this. You've just finished up a month and business was booming. Invoices have been paid, clients are happy. It was a great month. But then fast forward to next month and crickets. Does that sound familiar? So how the heck are you supposed to scale your business when this is happening to you, right? How are you supposed to be able to hire employees and know you can continue to pay them? Pay your bills on time, right? Do all the things that you want to do to be able to expand your business. Well, stick with me because by the end of this video, you're gonna have some practical and actionable steps to be able to help you get to a place of financial stability, no matter how variable your business income may be. Hi everyone, Jamie Trull here, your trusted CPA, giving you all of the tools that you need to stay informed, organized, and profitable in your business. Make sure to subscribe. Okay, so the very first step to managing inconsistent income is to build up a buffer fund. This could be something like an emergency fund, but I tend to like to refer to it as more of a rainy day fund. I feel like when we talk about emergency funds, it makes it seem like the sky needs to be falling in order to use that money. But a rainy day fund, well, rainy days happen a lot more often. So a rainy day fund is really about putting money aside during the good times, during the good weather, let's say, to carry on the metaphor, so that when it rains, you have that waiting for you. So the key there is to look forward. And you don't always want to assume that just because you had a good month today means that that is going to continue. So you want to be putting that money aside regularly. And I recommend putting a percentage of your profit aside in order to support you in the days ahead. And the way that you're going to calculate the amount you need to grow in that rainy day fund, as I like to call it, is you're going to want to at least have 1 to 3 months worth of your base operating expenses within that fund. Now, you won't save for that all at once. It's going to take some time to get there, and that's totally okay, right? But if you save it little by little, eventually you're going to be able to save up enough that you will feel more confident that you're covered in case anything does happen. So when you want to figure out what your base monthly costs are, you're going to use some averaging, right? This isn't about getting it perfect. It's just about estimating. And so what you're going to do is look at the costs in your business, go into your accounting software, look at a year's worth of essentially your recurring indirect costs. So we're going to exclude any one-offs, right? If you went to a conference or something like that, we're not really going to think about that right now because that would be an easy thing to adjust for if you needed to. But the things that are recurring that, maybe it's payroll for your salaried employees, right? Maybe it is software that you couldn't just shut off if revenue started to dip, right? Those are your indirect costs. They're not specifically tied to how many sales you make, okay? So ignore things like cost of goods sold because again, that is going to flex with how much revenue you make, but we're looking at those expenses that are more indirect, essentially your overhead. And then you're going to take that 12 months, again, estimations are totally fine here, and divide by 12. And that's essentially your monthly run rate. Okay, so that's how much of expenses you want to be able to be prepared to pay no matter what revenue you make in that next month. So let's say you go through this process and for ease, maybe it's $120,000 of annual indirect recurring expenses that you're probably going to have to pay. You're just going to divide that by 12 to get 10,000. Now, could it be some months are 9,000 and some are 11,000 based on the timing of when some of these things hit? Yes. But ultimately, in your mind, when you're building up that rainy day fund, you're just thinking about that 10,000 times 1 month, which would be just 10,000. Or if you wanted to save 3 months worth, obviously that would be 30,000. So that's going to take a little bit longer. And the more variable your revenue tends to be, the higher on that range you want to save. Again, you're not going to save it all at once, but when you have those good revenue months, those good profit months, that's when you're going to want to be stockpiling, knowing that that may not continue. And then if you have months where maybe you don't make enough revenue to cover those base expenses, you now have your rainy day fund that you can pull from to keep things going, and you don't have to borrow from future you, meaning you don't have to go into debt to pay those bills just to get through to the next good season. So if you're wondering how you practically can do this, how are you practically going to put money aside for a rainy day? Do you need to open all these different bank accounts and pay all these fees? And the answer is no. There is a great product that I recommend called Relay. It's a business banking platform, and you can open as many accounts as you want pretty much in there. It's banking, you can transfer seamlessly between them. You can even automate the rules so that it transfers automatically. So if you're like, you know what, I want to put aside 10% of the income that I make into a rainy day fund, but I just, don't do it and then I spend it, and you want to protect yourself from yourself, this is great for you because you can automate that. You can set up whatever rules you want to around transfers, and you can even use it for things like saving for taxes or other accounts you might want to save for, like paying yourself or reinvesting back into your business. I really recommend it for all of those things. And if you get one of those free banking accounts, then definitely use my link, jamietrull.com/relay, so that you can get $50 once you deposit your first $100. So the second thing you're going to want to do if you have variable income is you're going to want to make sure that you tie your expenses to your income as much as possible. You want as much variability in your expenses as you can, i.e., direct expenses. So what exactly does that mean? For example, right, a salaried employee is by definition an indirect expense. The salary is going to be the salary no matter what happens in your business. If your results tank, if they go up, it doesn't matter. It's staying the same. But let's say you have hourly employees or contractors that bill you based on the amount of work that they actually do, right? That is something that ties better to your revenue and can insulate you from having to pay high costs at times when you don't have the revenue to support it. Now, that may not be practical for everyone's business, and of course you need to make the best business decisions that you can with regards to especially things like hiring and staffing, right? But this is something to think about. How can you closely tie the amount of money you're making to what you are going to have to spend in expenses? And that is going to limit your risk. That's why people do things like commissioned salespeople, that you aren't having to pay them tons and tons of salary if the sales aren't coming in. How can you set up your expenses to better match with your revenue? So maybe just thinking about some creative ways to do that. Now, before I move on with the next 3 tips that I have for you, I want to make sure you grab my free profit planning template. It is going to help you to be able to visualize what this could look like, start saving for a rainy day, and also maybe be able to pay yourself more, save for taxes, figure out how much you want to reinvest into your business to grow it. That is what my profit planning methodology does. So definitely make sure to grab that, jamietrull.com/profit with 2 F's plan. Okay, now we get creative. So we are on to step number 3. And this is one of my favorites because it's kind of thinking outside the box a little bit, getting creative, diversifying your income streams. Let's say you are a summer camp. And so by seasonality, of course, summer is going to be a much higher time for revenue for you. And kids are in school year round, right? So how are you supposed to be able to make money during those other months of the year when it's much more quiet? That's the question a lot of places like that have to deal with, that are very, very seasonal in nature. And if that's you, whether you have a summer camp or just some other business that has seasonality to it, there are creative ways that you can make money during downtimes. Because remember, during downtimes, that summer camp doesn't go away. It still has bills to pay. Right? It's not like all of a sudden expenses go to zero because there are, no kids coming to summer camp. There are still expenses that are going to be had. So you want to be able to bring in revenue to support those expenses. And getting creative is one of my favorite things to do. So in that case, I would, if I were just brainstorming with somebody with a business like that, I'd say, well, what about team building activities? Are there, ways that you could use? You already have this ropes course here. Maybe you do some team building retreats for companies and they can come during the year, right? Things like that. You can start thinking about what are ways you could continue to make money and support the business during the off season. Or maybe it's something more like taking one-time costs and turning them into monthly recurring revenue. Maybe people tend to pay you once a year if you're maybe a tax accountant, right? And you get paid once a year to do a tax return. Well, maybe instead you make that into a membership where people have access to you year round and you do their tax return. Not only are you probably going to be able to make more money doing that, but you're going to be able to structure it where maybe they're making, one payment a month. That's probably easier for them anyway. And it's easier for you because you have more insight and more knowledge of what your revenue is going to be on a monthly basis. And so you're not having these huge months followed by trickles, right? You're able to smooth that out quite a bit more. So getting creative with that, the membership model is really, really popular right now. So that could be something that you could do to be able to smooth out those earnings. And along those same lines, maybe something like digital courses. I'm a big fan of digital courses. I sell them. I love them. And those can bring in money during times of the year where maybe it isn't quite as busy from a one-to-one perspective. If you are doing one-to-one service work, then that can supplementally be running in the background to bring you in another revenue stream to help support you. So there are lots of different ways that you can do that. Now, if you're interested in digital courses or digital products in general and how to offer those things and add them to your business, I have a whole entrepreneur resources section linked down below that's going to give you everything that you need to start out. And the next thing you're going to want to do is manage your cash flow effectively, meaning really looking at the timing of ins and outs of the money in your business. So I tend to always look forward. You can forecast your cash flow on a weekly basis, a monthly basis, however you want to look at it, maybe even a daily basis, depending on how much money you have going in and out. But you can forecast that out and look to say, okay, when do I know certain bills are paying? When do I know I'm getting certain revenue? And really be future oriented when you are looking at it. And maybe it's things like even going to suppliers and negotiating longer payment terms to give you a little bit more time to pay on those expenses so that you don't have to use debt to cover those payments, right? And the last tip for dealing with inconsistent income is emergency preparedness, okay? So that's similar to what we talked about with the rainy day fund, but a little bit different. Now we're talking about just being able to handle emergencies, true things that pop up out of nowhere that we have to deal with. Maybe it's an expense that we totally did not expect to have, right? How often does this happen? So having that rainy day fund is going to be really helpful for those emergencies as well. And so thinking about those things and being prepared ahead of time goes a very long way. And on that very same point, right, about emergency preparedness, having insurance can be a really important thing, especially if you have physical assets or inventory or things like that that you want to be able to prepare in case something happened to it. I actually knew a business owner, and it was a very sad situation where there was a flood where her shoe store was, and they lost all of their inventory, and they ended up having to go out of business because her regular insurance did not cover floods. So those are things, make sure you understand, know your insurance, know what it covers, know what it doesn't, know what kind of insurance you need, and that's going to go a long way in case of a true emergency. So there you have it, 5 strategies to save and thrive even during periods of uncertainty with inconsistent income. But now you might be wondering, well, how do I pay myself with inconsistent income? It's great that I could save for these emergencies, but how do I actually pay myself? Because that's the reason we're in business anyway, right? So if that's the case, then definitely check out this next video. In that video, I talk about how much you should be paying yourself and how to make it happen. Don't forget to subscribe and make sure to hit that bell icon so that you get notified anytime I put out a new video. Thanks for watching. If you found this video helpful, make sure to give it a thumbs up and go check out the resources on this page for more.